What's up YouTube, it's Louis here. Hope you're all well. We're looking at Quant today. Thank you guys for watching. Please like and subscribe, and of course comment what you think is going to happen next with Quant. But let's just remind you of what we left off with. So we flipped this downtrend into an uptrend right there, and then we measured from the high to the low just like this, because we knew that once we bottomed out here, we started coming up. So that's telling me that we're trying to come back to this high. It does not mean we are going to, but we're at least trying to. And I put it from the top to the bottom. I'll get rid of this for now. We'll look at it again soon. And you can see we ran into that 0.618 right there. This is what the fibs should do. An impulse to the downside, a corrective phase back up to the 618 before continuation back down. So we should actually go ahead and lose this low that we created where we started this bounce from. However, you can see you've now actually put in this higher low. So you should have gone lower than that, but you went higher than that. So you've actually got a higher low. So after a higher low, this could potentially be the start of an uptrend. Potentially. Now, how do we create an uptrend? We need to go and make a higher high and eventually go higher than that. But the next step is a higher high above this and then another higher low. So let's say we made a higher high there like this, and then we make a higher low here, and then we head higher than that. So that's pretty much it for what we think needs to happen. We know with this high, if we are retracing back up to there and we're breaking 133, our next technical target is the 1618 at the 153 location. What is also so interesting with this location is that this line wasn't put there because of the 1618. It was actually there because of this ascending triangle over here. So that's actually the technical target, and this line was here from the last video. Can you see? From the high to the low. So from the first tap of resistance back to support, put that on the breakout right there, and it lines up exactly, acting as confluence to the fact that we are going to come to 153, because there's two reasons why we're going to come up to 150. Actually three. First of all, if we're breaking this green box, this is actually the 618. From here to there, you can see the green box right there is the 0618. So that's why we struggled. And with this retracement, with this push phase and this exhaustion phase, this retracement phase, you should actually, once you top out here, you should actually come lower than this low, and you've actually put that higher low and then another higher low. So very positive sign. So that's why I know if we do get above this green box, we actually are coming back to this high, and this is at 156, 160. So that's your first reason, your first confirmation, or the first reason why we're going to come back up to in around 150. The second reason, acting as confluence, is the double bottom over here. One bottom, neckline, second bottom, breakout. The target's at the 153 location. So the double bottom is just the ascending triangle. Also, we know if we're breaking out above the 1 point over here, we're going to the 1618 at 153. So we've got three things acting as confluence together, telling us that we should be heading to 153 eventually, as long as we're staying within this ascending triangle, as long as we're staying above this green box. Because if we now come and measure from here to that high with the fibs, we know that if we want to stay bullish, we need to stay above this green box down here, because it's the 0618. So we know it's so key to hold in and around $106, because if we're losing that, you're going to create a reversal wave down to $92, and then lose the one. We're coming to the 1618 at $73, but we're not seeing that at the moment because we're getting a series of higher lows. We just need to go and make the higher highs. So I hope you guys enjoyed today's update. Just one last thing, but again, I need to remind you to, of course, like and subscribe, as we're trying to get to 2.5k subs as quick as possible to then get to 3, of course. But yeah, you can see this neckline that we've been talking about on the channel for a good while now. We had this M patterns neckline, and then it became a double bottom neckline, and then you broke out. You couldn't backtest it, so we actually fell to the EMAs. We couldn't hold them as well. And then now we're actually coiling up in another ascending triangle over here, potentially going to break out to the upside. I can get you a technical target. Remember guys, an ascending triangle is a double bottom, basically a W pattern, and you can see that target is right there at the 0618. So it's telling us that we're going to try and attempt, if we can break out here, try and attempt that 0618, maybe fall back for support before breaking it and creating that reversal wave back to the 1, which is our first small target, and that's that green box. So probably going to get rejected here. fall back to the ascending triangle, resistance as support right there on the 786,127 before breaking above the 1 and heading to the 1618 technical target at $153, because we know that we're trying to retrace back to this high, especially once we're back above the green box. So once we're above the green box, that would be an amazing long opportunity. So in and around $130 all the way until $160, so a nice $30 increase. So that would be a nice little trade of in and around 20% without leverage. So that's the beauty of the altcoins. You don't need too much leverage. You don't even need leverage. It's only when you're trying to scalp on like very short-term time frames, then you need leverage. But swings like that, you won't need leverage whatsoever, because if we're going for like a 20% trade, right, our stop loss needs to be minimum 2 times less than that. So if we're going for 20%, maximum our stop loss can be 10%. Maximum. We would prefer 5 to 10%, but we can do 10% if we're on a winning streak, if we're super confident. Otherwise, just stick to 5%. So if we have 10% risk with a 20% gain, we're going for 2-to-1 risk to reward. And of course, obviously, we want it to be profitable. And if it is profitable, then we've got 2 rewards. If we lose the next trade, we're still in profit. And if we lose the next trade after that, that's when we go into break even. So that's the beauty of the risk to reward of 2-to-1, basically. So if the stop loss is already 10% and I want to go in every trade, risk maximum 10%, and the gain is 20%, you don't need leverage. However, if your stop loss was something like 1%, and obviously you want to risk 5 to 10% per trade, then you can go ahead and put 5x, 10x leverage, because the stop loss is only 1%, when in fact you want to lose 5 to 10%. So how do I make this 1%, 5 to 10% stop loss? I need to 5x it, I need to 10x it. Only in this case. If it was 2%, 2.5% stop loss, then maximum 2x leverage, maximum 4x leverage. Do you understand, guys? So hope that was a bit clear on leverage as well. Nice little mentorship lesson right there for you guys, a little sneak peek of what's in the course. So if you guys are interested in taking your trading to that next level, go ahead and wait until the end of this video to listen to the packages that I offer, the course, the mentorship, and the crypto chat. Thank you guys for watching. Please like, subscribe, comment, and I'll catch you in the next one. Peace. So guys, these are my crypto packages. Let's bring you over to the one-on-one mentorship, where it's £650 one-off payment. You will get video call lessons with me over a 1-month period. We will do 1 or 2 hour lessons every single day, and you don't need any prior knowledge whatsoever. You can have 0, you can already be an advanced or intermediate trader. My job here is to 10x your learning curve. Everything that I'm teaching you has taken me over 3 years to gather and cost me over £10,000, whether that was good courses, bad courses, mistakes, scams, or whatever it was. It cost me over £10,000 to get all this information that I'm personally teaching you. I also had to pay for my mentor over $2,000 for a 2-hour lesson. So what you're getting for this price is absolutely phenomenal. Now, you also get the 6-hour crypto course included in this price, as well as the signals chat until the top of the bull market. Now let's move over to the signals chat. I wouldn't call it signals. This is just basically a group where I post what I'm personally doing, my thoughts on the market, if I think it's going up or down. So there's daily chart updates, but also, yeah, throughout the day, what I'm thinking, or where I'm buying, where I'm selling, where I'm looking to accumulate, or obviously get out the market. This is what's in the crypto chat, and that's £25 for your first month and £40 onwards. Then we can move over to the 6-hour crypto course. There are over 35 plus videos in this. You don't need any prior knowledge to start. You can be beginner, intermediate, or advanced level trader. My job here is to 10x your learning curve, to make you into that self-sufficient trader, to make you into a trader that doesn't need outsiders' help. Not my help, not any YouTubers' help, or any crappy group chat. So if you're interested in this, you also do get a one-on-one mentorship lesson with me at the end of the course, so you can get any questions answered, so you're clear and you know exactly what to do going forward. If you're interested in any of these packages, then please go to my Twitter at Louis_crypto and literally comment down below and just say, Louis, I'm interested, and I'll personally private message you to see if you qualify for any of these packages. Thank you guys for listening, watching the video. Please like, subscribe, comment, and I'll catch you in the next one.